Hey, guys. Welcome back. We're going to be taking a look at QQQ. We're going to look at SPY. We're going to look at NVDA, Meta, Apple, and SMCI today. This is the weekend edition. We're just going to look at where price ended on Friday and where we can anticipate our levels of support, resistance, potential price action is going to go into the next week. Before we get started, don't forget to check out the link in the descriptions below. We got a new promo going for Rawstocks, first month free for the monthly premium subscription. You use the code FLASHPROMO. There's also some other links to the Traders Helping Traders Discord and the Top Step, where you can take a futures funded trading combine. If you're interested in becoming a futures funded trader, we do have some current traders in the Discord room that are working on their combines right now, and I have recently passed and become a futures funded trader as well. So let's dig into the charts. We got QQQ open. We're going to take a look at mostly some daily or hourly charts here. QQQ and SPY, we're going to look at daily and hourly. I think the rest of them will just look at hourly. But we got QQQ open right now, and you can see on Thursday we had that nice push up. On Friday, we had a pretty small candle relative to some of the price action that we've been having previously in the week. We did not take a new high on QQQ. On Friday, we did try to push up. We ended about consequent encroachment of that breakdown candle. And we do have a large daily fair value gap. And when we look at the hourly chart, you'll see there's also an hourly fair value gap here as well. We'll be looking to see if this holds as support as Q looks to push higher. I do think that it will. I think that we could potentially see early into the week Q's come back down, test this 1 hour in this daily fair value gap, maybe the consequent encroachment of the daily fair value gap, maybe just bounce off the kind of upper bound of this 1 hour fair value gap, right? Drop down and then start to push up and see a new high. But we have just ran that new high on Thursday, immediately sold off. I do think that's a little bit of a fake out, and I do think we're going to try to push up higher, but that's just speculation. So we're not going to predict. We're going to react to what price gives us, on the shorter time frames when we're trading, day trading, and scalping, intraday. But I do anticipate that we might see this pull down Monday, maybe Tuesday, and then see us kind of rally Wednesday, Thursday, maybe even Friday, up to a new high. Now, if we do fade even further, we could go a little bit deeper, right, into the daily fair value gap and into the 1 hour fair value gap. The consequent encroachment is at 440.60 on Qs. Now, if we take that out and close this 439, at that point, we could be looking to make a run down to 432.79, where this sell side liquidity rests, and we have that giant gap here. Might try to plug down even further into that gap, but that's neither here nor there. As long as this daily fair value gap and this 1 hour fair value gap are holding, Q's looking good to continue its bullish moves to the upside. Now, if we drop down again into the 1 hour chart on Q's, you can see, and if we measure this out, we got a return to optimal trade entry, and we would be looking to see, price maybe come down to one of these take profit areas, maybe even all the way down to symmetrical swing. Not really expecting it to hit the full 2 standard deviations, but would like to see us push down a little bit further, take this sell side liquidity right here, come into that fair value gap, see if it wants to hold, and then see price rally up from there. So watch those fib levels, right? Also, price likes to react well to fib levels. And so if we were watching for a potential what price could do, right? We've come down, we pop back up, right? We're starting to come down. We're going to take that and we'll probably fade down to 442.97. And then we could see a reaction. Maybe that comes up and takes a new high and springboards us. Maybe we come right down to that next fib level first, right? Into that fair value gap. And then that springboards us up to a new high, something like that. But we will be watching, these fib levels specifically, and then maybe again that comes all the way down to that symmetrical swing or that 1 standard deviation, right? And then we see price pop from there. So a couple different areas, but we will be watching as we sell down. Just be watching these fib levels. Now, if we pop up, the fib levels are still good as well. You can use those fib levels as areas where we might see reaction. So we've come down, maybe we hold this, right? Maybe we come back, try to come back up to this 50 fib at 446.83. Maybe we come back a little bit deeper into the optimal trade entry, 447.86. Maybe we make a run on back up on the high, 449.34. So all of those levels could be potential levels of resistance and potential levels where we would see price have some sort of reaction. So just have those on your chart as far as levels to watch on QQQ. We jump over to SPY. SPY has a similar look, but took a new high pretty aggressively last Wednesday. That was the FOMC. And then, Thursday continued to push up, get a new high. Friday sold off a little bit, right? So we got two bearish candles off of the top there. And same thing, we got a bullish fair value gap inside a bullish fair value gap on two different time frames. There's confluence in that right there. And so we will be looking to see, does price come back down to consequent encroachment, then see us push higher to a new high, right? Or does it fail to take the new high, come back down, try to run a test on these breakout candles, specifically this one, right? And if it gives up that fair value gap, we'll be targeting the next breakup candle, and then we could potentially be targeting sell side liquidity all the way down at 508.20. Don't think that's going to happen. I think we're going to find support here in that fair value gap somewhere, and then I think we're going to push up to a new high. I'm still tracking 530 up to 538 as potential full extension on SPY before we see any deeper meaningful correction. Here's SPY on the 1 hour, a little bit different look than we got with Qs. SPY did not give us that optimal trade entry. It has just given us this kind of sell-off, and we saw the price kind of trickle down into close. So the way that looks, I might be expecting Q or SPY to actually have a little bit of a pop up, fake out, then drop down to that consequent encroachment or even that 1 hour consequent encroachment of that fair value gap, right? And then start to make a move back to the upside. Now, nothing says we can't, with futures trading right now, maybe futures starts trading down, SPY just gaps down and then starts its rally right away. That is totally something that could be possible. We jump over to NVDA, we got the 1 hour chart here. NVIDIA is just strong as hell. Just keeps rallying, even when you think it looks like it's going to be falling to take new lows, right? On this move here, looked like it was coming down, going to take the sell side, fell short, just went ripping back up, right? All the way from 850 all the way up to 950, basically a $100 move, through that CPI event and into last week. So we did get a little bit of a sell-off in the final hour, but it did not push down and take a new low. We do have this 1 hour fair value gap. We're going to be watching that. We also have Fibonacci levels to be watching as well, from this low to this swing low right here. If we're looking for standard deviation, I'm going to have my eye on 960. You can see that price has been reactive within these levels. We see reactions up here. We see reactions down around the 0, right? We saw price push through the 1 standard deviation, drop back down 2 and hold it as support. That's 934.48. Now I'm looking for price to push up to 960.75 and then potentially all the way to 974.22, which would be the top or the buy side liquidity. If we take 974, we're going to push up or try to push up to 1,000. That's basically a given. But if we get to 960 and we find rejection and we failed to deliver on the new high, there is a wick over here. There is liquidity. It's a nice liquidity pool. We could just draw into that and then find ourselves selling back down before we try to make another run at the all-time high. Okay, so just be careful as we start to get to the top here that NVIDIA could get rug pulled as it baits, new bulls into thinking we're getting to 1,000 quickly. This is probably going to be a little bit of a sticky area. It could run us all the way back into the next earnings season, which is not until what is it, April? I don't see it on my calendar here. February, yeah, so probably April sometime. I don't see it on the chart here specifically, but we could just kind of like go back and forth between this $100 range all the way into the next earning, and then have earnings be the one that finally catalysts that pumps us over to 1,000 and above. shortest or most risk-free target right here is this 1 hour fair value gap. If we invert it and we come down and we close a 1 hour candle below 931.66, then I would be looking to target 908. If we leave this fair value gap open, I'm looking to target 960. So you could, if we pull back down into this fair value gap on Monday, you could look to take a long up to 960 for a weekly call or a 2-week call. And then, if we drop a 1 hour candle below it and close it, you just close the trade out, take the loss. Okay. Alternatively, if we come down, invert the fair value gap, close a 1 hour candle below, you could again look to target 908 for, a 1 to 2 week trade. Also with the fair value gap high being the stop loss target on that short trade. So just depending on how it reacts in this 1 hour fair value gap would be how I approach that trade if I was looking to trade it. We got Meta. Meta has a very similar look to NVIDIA right now. Failed to deliver on the low, pop back up. We got a fair value gap, same kind of deal. If we drop down through this fair value gap and we invert it, I'd be looking to target 494. I'd be looking to target 481, depending on your time frame. Could be like a couple weeks out on those plays. Also, if we just pop back down into it, looks like it's going to hold a support. Start to see price move back up out of it. You could look to target 523. Again, multiple weeks out on that contract. Apple has a much different look. Apple's been selling off. We got an equal low. We popped up. We got a bullish breaker block, but we have a bearish fair value gap on the 1 hour time frame above us. So if this sees price hold this breaker block as we potentially stay here or come back into it a little bit deeper, we could look for price to come to the consequent encroachment of this 1 hour bearish fair value gap up at 174.64. At that point, I'd be looking to see if we come back down, take these equal lows, and then come back all the way to sell side liquidity at 165. Okay, we failed to deliver. We rallied back up. We sold off aggressively. If we draw back down into it, I think we're targeting sell side liquidity eventually at 165 anyways. It's just whether we head up first or that breaker doesn't hold and we come right down to the equal lows, take the new low, grab the liquidity at the bottom, bet we see a double bottom down there, and then we start to see price move up again. Definitely would be a long-term buyer at 165. I like that price. You can see that would be a market maker sell model where we did buy side of the curve, sell side of the curve, and you can also see we've had a lot of kind of consolidation on Apple in that area, all the way dating back to, basically about a year ago, where we also saw kind of some consolidation in this same range, back in 2022. So do I think Apple is particularly weak? No. Do I like the 165 price? Yeah. Could it go a little deeper than that? Certainly. But I do think that 165 is a fair price to start building a position if you were looking for a long-term position on Apple. Now, if you're looking to trade options on Apple, again, we're just going to trade what's in front of us. What's in front of us on the 1 hour chart is a breaker block that needs to hold if price is going to continue to rally. If not, this was just a dead cap bounce where we popped up. But one thing I do see here is I see this optimal trade entry. I see this failed to deliver. I see a pop back up, and then I see the equal low. So that is a 5-wave structure right there, right? So I would anticipate we're going to see something like that, a 3-wave structure up before we potentially see that flush down. So just be careful that you don't jump in the short too early. And we're really looking at this breaker block, whether it holds a support or if price comes down through it, right? And then if it comes all the way down through it, then that becomes a mitigation block instead of a breaker block. And we'd be looking for price to then head lower at that point in time. So just really watching this level, and that is in between 171.21 and 172.06. Last, we're going to look at SMCI. SMCI, about a week ago or so, we were looking for price to return to this breaker. This was a 1 hour breaker block. You can see we're starting to head into it right now. These are the levels I'm looking for: 819, 717, 614. Okay, those are fib levels. We did come down. We popped back up. Optimal trade entry. We sold off, right? We didn't get the full symmetrical swing. Now we're seeing us rally back up. What I do think is happening is I think that we are going to rally back up into that breaker block that we've been talking about, right? Like that. And I think we're going to see one final flush come down and take at least this symmetrical swing. So if we get back up to 1068, 1069, 1070, somewhere in between 1024 and 1114, you could look to go short there and then target again a couple weeks out, maybe target this 819 or 717 and go out of the money on those. 3 to 5 weeks maybe would be a good timeline. Could happen much faster than that, but then at least state is not decaying your position too quickly. But again, this breaker block would be a good area to go short. If you do go short in it and you see the setup, stop loss is right above, right? It's going to be a 1 hour candle close above the high of the breaker, or, and then we're going to target our 2 to 1 at least, or our symmetrical swing right there. But alternatively, if you see price come up and back down and it looks like this breaker is going to hold, which I don't think is going to happen, but it's possible, you could look to take your long entry targeting the old high, okay, and then your stop loss would be 1 hour candle close below the low of the breaker block in that case. I think the risk reward ratio is better to the upside, especially because we saw this kind of market maker shift. We got buy side of the curve, we got sell side of the curve. I think we're just waiting for, in my opinion, the sell side to deliver, potentially all the way back down to 614. But I think there's so much interest in it, it's just not going to happen overnight necessarily. But we'll see. I mean, you can see this was a pretty aggressive move from 1150 all the way down to 850, so it's like $300 move. So it could happen fast, right? Maybe we pop up into this breaker, and that's about 1050, down to 650. That's about a $400 move. That'd be pretty impressive, But even if it was just a $300 move here, just similar to this one, something like that, right? Something like that. That would be a very nice payout if you were to take that trade. So hopefully this has been helpful. Don't forget to smash like, subscribe, share with all your friends. Appreciate all the support. We'll see you guys in the trading rooms.